let's see, we took a high out here actually, so I would be right there, right? We took this high, right, which is a bunch of liquidity, so we would go on the 15-minute down here. Let me get off the sessions actually here. This might be a lot more helpful to show you guys. There we go. Okay, so once we swept this liquidity line, right, now watch this. Bear with me here, like this, I've never seen this obviously, and so this is a good prime example here. All right, everyone right here is waiting for their chalk, right? Right there. Now, you could, this one actually over here gave us a chalk, right? Right there. It gave you a chalk. However, a lot of people would be waiting for this supply. That's not wrong to say that this would be your entry, right? However, do you notice what's above this supply, right? Price took out that liquidity right there, just as I explained to you guys, right? And what do? You enter from this high to go bearish like this. Now, these are explosive. You can see how price explodes to the downside, right? Without even having to give anyone else a chance to enter in the market, right? If you do the line chart, I'm pretty sure, yep, right there. Look, notice this low right there and this other low right there. This low has not broken this low yet, right? This, in fact, is a liquidity sweep to take liquidity from this low, right? But it ran back up, okay? So in my eyes, okay, when I teach traders how to enter correctly, we don't want to be in the safe. We don't want to be in the safest, how do you say it? In the safest conformational sort of typical trader entry, okay? We don't want to just wait for the change of character. Once the change of character happens, you are already too late. In most cases, you're already too late. However, this setup here, like I mentioned from my previous drawings, right? There's your high, there's your low, right? People wait for this change of character, right? There's a change of character. This one actually happened to be perfect, right? So this would be a great scenario, right? So for you, the typical trader out there, they'll be able to see this sell, right, and be able to enter there. This is fine. In other occasions, it doesn't happen like this, right? However, take a look at this example here, though, right? If you translated this low right here, this break, right, because it is a break of structure actually, but it's a liquidity break. A lot of traders would wait for this right over here. So they would sell, right, and then they would most likely want to hold the trade down to their next low, which is their old low. So that would be right down here, right? So this is what would happen, right? And then to their surprise, the market takes them out. It might be a break even, or they might have lost the entry, right? So in my eyes, notice again here, the high never broke this low, right? It actually never did because the line chart is right here, all right? So price runs up, I wait for the liquidity to be swept, and then I go in for the killer, right? But then typical entry traders, right? Typical traders would see this. There's your chalk. Here's your entry, right? Which is a good little safe entry to do in many cases, right?